Hello traders, this is Jeff. It is Friday, March 17th, 2023, St. Patrick's Day. I'm going to give an end of the week review for what I've done the last week or so, and if you'll watch this to the end and let me know in the comments if you like this, and maybe this is something I'll continue to do every week. So let's bring up a calendar real quick. Okay, I actually want to start out, we'll go back to March 8th on Wednesday. I placed orders to buy T-bills, 4-week T-bills that would have been auctioned off on Thursday, March 9th. And then those bills would have been issued on March 14th. So this is from treasurydirect.gov, and I'll link this in the description below. These are the bills that were issued on Tuesday, on Pi Day, and this is the rate of return I'm going to get, 4.64. And I'm glad I did that last week rather than wait till this week, because the rates decreased 42 basis points here in a week. With all this banking going on, bank collapses, interest rates have really taken a decline in the past week. So I got those locked in. They'll mature on April 11th, and then at that point I'll decide what to do with from there. We'll also have the Fed meeting next Wednesday, so that who knows what's going to happen there. As always, if you enjoyed this content, like the video, maybe subscribe to the channel. I would really appreciate it. Okay, the first trade we'll talk about was in Coterra Energy. And there's actually a video on this which I will link in the description below. But on Wednesday, March 8th, I sold a cash secured put in Coterra, looking to make a little bit of option premium, and if I got assigned, then I would be assigned in plenty of time for the ex-dividend date. So let's look at a daily chart here. I believe this was the day here. I sold a $25 put. I did get assigned, and so I've got 100 shares at $25. And I like this company. We'll take a look at Google Finance here. They've got good quarterly revenue. Their net income is very positive, and if we look at an annual basis, the net income or the revenue and net income has really been increasing. Now we'll take a look at the dividend history here, and we see here that the X date was the 15th, so I got long prior to the 15th, so I'm going to lock in this 57-cent dividend, which is going to be paid, I believe, on the 30th. Let me widen this out a little bit here. Yeah, so I'll be in line for that 57-cent dividend on March 30th. I got aggressive with Coterra this week. On March 15th, I actually sold a cash secured put, a 23 strike cash secured put, expiring Friday, March 24th. For that, I received 65 cents. And then as we dropped lower on the 15th, I actually sold another cash secured put, which is going to expire today. I sold the 22 half, and I believe I received 50 cents for that. So yeah, these were my two option trades this week, and with the put premium that I received on March 8th, I've actually taken in $143 and change in option premium, and I will be in line for that dividend on March 30th of 57 cents. So right now it's about 45 minutes to the close today. Coterra is currently trading 23.18, so I'm kind of hoping this 22.50 expires worthless. Because like I said, I did get a little bit aggressive with that. But I wasn't able to sell any calls this week, and I probably should have done so on Tuesday, but I didn't want to mess up the ex-dividend. So anyhow, my net cost on Coterra now, bring this spreadsheet back over here, and I'll have to widen this. Sorry about this. Should have paused the video. So my net cost is now $23.57. If we account for this 50-cent dividend on March 30th, then my cost would be $23 even. But we're not gonna count this until it's paid. Okay, next up is Google. And I've had a position in Google for a while now. If you see the yellow line on the chart, this is my cost. I got assigned at 104 back last fall, and I had been selling puts last fall because I love this area of support right here. Well, this area of support held until it didn't, and then that's actually been pretty good resistance ever since then. Well, with the nice run Google's had this week, zoom in on this, I sold a call, a 104 strike call that expires March 24th yesterday, which would have been Thursday the 16th. And let's bring in my spreadsheet, see what I got for that. Okay, these are my option trades in Google. Now, I sold that when the stock was trading at $97.61. I got $36 for it. So this has been a trying position for me. I have brought in a total of just under $450 in premium since mid-September when I got assigned. This has been a pickle. And honestly, we were we were on our third day up, we were into resistance here, and I thought this would be a good time to sell a call and lock in some profit for next week. Lo and behold, we have a couple of more, or we had a nice bullish day today, and we had a very nice bullish day yesterday. Could have received more premium, but I've been beat down in this stock so much, I thought if I can get any premium at all, I'm going to do it. So I went ahead and did it. And taking a look at my results now, I've got my net cost down to $99.50. And to be honest, if I were to get called away next week at 104, I would be happy. I'd be happy to be flat. I'd take my option premium for profit and just move on to the next trade. Okay, so the next one I want to discuss is the SOXL. This is one of those triple leveraged products that is a representation of the semiconductors. I've been in this trade a year. I have too many shares. It's something I should never have been in to begin with. But let's take a look at the spreadsheet. Because there was actually a couple of trades I made in this week. As a matter of fact, I made a couple of trades just today, just in the last few minutes. So my first foray into this, I sold a put in April of last year, a 28 strike put, and I was assigned 100 shares. So this is all my options activity the last year, and I've taken in a grand total of, let's see, let's just auto sum this real quick here. Yeah, $2,077 in premium, and I'll bring this back over here. So my average cost is $18.39. My net cost is $15.42. And let's take a look at the chart real quick. So on the 14th, which would have been this day here, this would have been Tuesday, I sold 1650 strike calls that expire today. I received 16 cents for those. And my thought process was, if I can narrow down, or if I can lower my net cost a little bit, that's good. If I get called away, I'm still making some money on the trade. I won't be making any money on the shares, but I'm making some profit on the options. And I'll be flat, the silly thing. So anyway, we're vacillating around. Then we have this big green day on Thursday. And today, we actually had a high, I believe, of 1690. Yeah. Now, within the last half hour, I actually covered those calls for 1 penny. And I actually sold 38 strike calls for next week. I got 34 cents for those. And let's see, I think the stock was trading around 1610 when I did that trade. Let's bring my spreadsheet back in real quick here. Okay, we'll take a look at these last two rows here. And I don't have that in screen here, I'm sorry. Bring this in screen here if I can. Here we go. So the stock was trading 1602 when I bought these calls back for a penny, and there was 7 of them, so $7. And I guess I don't have this part filled in yet. Okay, the stock was trading 1607. I'm sorry, the stock was trading 1602 when I covered those calls, and I did that today. This was the stock price when I sold the calls. So when I sold the $18 strike calls a while ago, the stock was trading at 1607, and I received 34 cents each. So I took in net $234.41 in premium. So prior to those two moves, my net cost was $15.75. So if I put these numbers back in Excel here, this is the buyback. That doesn't increase my cost too much. And then my sale, Sold $238 worth. So that knocks my net cost down to $15.42. Now, the reason I went ahead and did the 18s rather than the 1850s was basically just a little bit of greed. Now, I sold these for 34 cents just a few minutes ago, and the price has increased since the share price has increased. I was really kind of looking to do these, but there wasn't as much premium here as I wanted. It was around 22 cents. Well, it was probably around 24 cents, and I thought if I can get an extra dime and go down to the 18s, I'll just go ahead and do that. Now, if I were to sell my shares at $18, let's see what that would bring. Okay, if I'd get called away this week at $18, this total, the profit on this trade would be $1,802.65. I'd only lose $275 on the shares, which I can live with, to just be flat this product. If I were to go ahead and sell for $18.50, and maybe I should have sold the 1850s, but I didn't. We'll do some quick copy pasting here. So that would increase the profit a little bit. But the bottom line is I really like to be flat this product, and I would be more than happy to sell at $18. And I have reduced my cost from $15.75, I believe, down to $15.42, my net cost. So I think that's it for today. That's an update of what I've done the past week. I'll link this description, or I'll link this video. You might want to take a look at that next. Until next time, thank you for watching.